In your packet, there is a document, a checklist for starting your business in Vermilion County. And the last few pages of that document are going to have an itemized list of the different aspects of starting your business. Some of them are more general: conduct a feasibility study, determine if your idea is practical and marketable, which is somewhat what we've been doing as we go through what we're doing here today. And it talks through the different elements of that. But then there are some basic nuts and bolts that you're going to want to go through, and we'll talk about those here. One thing you want to do is go through and touch base if you need to have any sort of special licensing. So you would want to contact the State of Illinois Division of Professional Regulations for license requirements that might pertain to your industry. In some cases, for example, that might mean things like if you're in some sort of a nursing field or home care field, there may be license requirements. If you have certain kinds of requirements, such as a liquor license, potentially, if you have a restaurant, there are going to be state and local licensing requirements there. You may have certain construction types of businesses that require special licensing and registration. Roofers are an example of that. So go through and see which, go through and just double check your type of business and see if there's anything that you need to carry that is not something you know about already. Again, your Small Business Development Center can help you with that as well. At the local level, you're going to be looking at, so let's say, for example, we talked about liquor licenses, but let's say you have a food-related business. You're going to want to talk to the Food Sanitation Division of your county health department. This is the link for the one in Vermilion County and the information there. You're going to want to talk with them about licensure for your business. They will need to do an inspection of your property before you open. They'll make sure you understand what rules apply there. For example, you need to have your food service sanitation manager's certificate in hand. You'll need to have taken a test and gone through a class for that. You will also need to make sure that your facility meets all those requirements that are outlined when you take that course, and so you can understand those a little better and understand that there's a special fee and a special licensing there. It also explain to you about the Cottage Food Act. So if you're doing business in a food-related area remotely, when you can cook something in your home kitchen and when you can't. So that would be another step. The next thing you want to look at is if you're in the city, you're going to want to check their website to see if there are further requirements for your type of business. Contractors, for example, must register with the city for many types of home improvement types of contracting. Remember, roofers register through the state, but plumbers, electrical contractors, certain types of home improvement contractors have to register through the city. And it's going to explain what you need to do to make that happen. The site also will help provide information on zoning, inspections, demographics, and other information that might help as you're planning your business. So again, remember, when you're locating your business, is the area that you're looking at locating it in zoned appropriately for that type of business. And every community has, most larger communities have a zoning map, a zoning board that's determined where certain types of businesses can locate and where they can't. So you want to know that ahead of time. Smaller communities are less likely to have that zoning, but once in a while, if you're adjacent to a larger community, you'll find that their zoning extends out past the actual city limits. So again, it's best to check your city's website and see what applies in your case. Again, keep in mind any other regulatory bodies governing your industry. We talked about requesting your credit reports and your credit score, and this is the links we discussed. You might want to, at this point, also begin identifying professional service partners. So you're going to, we talked about that as an SBDC, we're not attorneys, accountants, insurance brokers, bankers. Now's the time to develop relationships with those kinds of professionals so that you can have specific answers to specific questions about your business from a professional in those areas. So if that's somebody that you work with now, for other personal needs, that's great. If not, you may want to find someone who works specifically with small businesses. Your attorney is going to talk through with you what the best business structure is for you, for your situation and for your business. The choices that you have available to you typically are sole proprietorship or partnership, an LLC, which is a limited liability company, or a corporation, which could be an S corporation or a C corporation. And there's many variations in between as well, but those are the general main types of structures your business might be. A couple things to look at here. One is liability. While an LLC is called a limited liability company, it does not in and of itself guarantee that you won't have some personal liability in your business. So that's why you want to talk with your attorney and make sure you understand exactly what that protects you from and what it doesn't. It will not allow you to borrow money from a bank and not put in a personal guarantee on that loan. If a bank were to lend you money only through an LLC or corporation, then it is true that only that corporation's assets would be at risk. But a bank won't do that. A bank is going to expect you to have a personal guarantee that you're going to pay the money back personally, not just through the business. Same thing is true on insurance liability. On liability, for example, if someone slips and falls in your business, if something that you have, if services that you've provided or products you've provided have caused damage, then they decide they want to sue you for that. If they sued only the LLC or the corporation, it is true that their repercussion, the amount they can receive from that would be limited to the amount of money and assets of that entity. Again, all that said, people have become very savvy and they will likely sue you personally as well. And because you're a small business, you're very much involved in the day-to-day decisions of that business and likely would be sued individually and could have risk there. So it's not that those aren't good choices to make as far as your business structure. Just understand making that choice doesn't protect you entirely. A lot of what the differences between the different structures has to do with how your income taxes are handled. And in the end, most of them are structured so that the profit from your business comes back to your personal income tax return. And it's just based on your personal situation as to whether or not that's the best decision for you. So again, this is a time to talk to your accountant and your attorney to see if that's a good decision. Sole proprietorship is the income, it's all done on your personal income tax return. It's just a separate schedule. An LLC and a corporation require a separate income tax return with the profit coming back to you personally and then charged at your personal income tax rate. When you set them up, an LLC or a corporation is set up through the Secretary of State's office and in your state, in the state of Illinois, and this is the link to the state of Illinois information. A sole proprietorship or a partnership is set up through your county government. So you would go to your county clerk's office and explain that you want to start a business. And the logic behind what you're going to do there is that people should be able to figure out who owns a business. So if I'm operating a business as ABC Consulting, someone wouldn't necessarily know that that was Carol Nichols. Whereas if my business was just me and I was as Carol Nichols doing consulting, then they know who that is. But if you are operating a business as a name other than your own, then you will need to work with your county clerk to set up an assumed name notice. And so what they'll do is you pay them a fee, and it's usually a minor fee, maybe $20, and they'll create a document that you're going to take to a newspaper of record in the county, and it's going to say that as of today, ABC Nichols Consulting is operating and it's owned by Carol Nichols, and there's more information on file at the county clerk's office. That notice would run 3 weeks in a row. You pay the newspaper to run that notice. It usually runs in the classified section of the paper. It's not something you're going to get much marketing value from, but it is an ad, and so you have to pay for it. And so that depending on which paper you use, the cost may vary, but the whole process of going through this is going to be still maybe $100 to $150 to set up a sole proprietorship and run the notice. Sometimes people refer to that as a DBA, doing business as. So Carol Nichols is doing business as ABC Consulting, and it's an assumed name notice is the document that you're running in the paper. Once that runs, the paper will give you a notarized confirmation that they did run it the way they should. You pick that up from the newspaper and take it back to the county clerk's office, who puts it on file, and then your business is established under that name at the county level as a sole proprietorship or a partnership. So if you are an LLC or a corporation, you would not go through that step. But that helps you walk through those. These links will also help you learn more about the LLC or the Illinois corporations. You can set those up yourself, but understand, I would highly recommend that you have an attorney help you to make sure that you've done everything you should. And I will reinforce, you can't just say you're an LLC. You have to have actually filed the paperwork, and there are fees to set them up, and there are annual fees going forward. So this explains all of that a little further. Many of these things we've talked about already. One thing we have not touched much on, and I will mention it here only because I want to make sure that you're aware. If you're going to have employees, make sure that you're following all the labor laws that are attached to that. There are minimum wage laws that you must follow. There are how long a person can work, certain health and safety rules you have to follow. And you need to know that you also will need to withhold federal and state employment taxes for that employee, and you'll need to withhold FICA and Medicare. As a business owner, another piece that we don't always think of as an employee, if I'm working for someone else, they withhold about 7.5% of my check every week for FICA and Medicare, Social Security and Medicare. We don't always realize is the business we work for matches that. So as a business owner, you will have an additional 7.5% over and above your payroll costs that will go into to the federal government for Social Security and Medicare for that employee. The other piece to remember is that you will also need to pay that for yourself. So as a sole proprietor or partnership, that's considered self-employment tax, and it's on your income tax return at the end of the year, but it's 15% of your profit, and that's your Social Security and Medicare. So if you're a corporation or an LLC, you still will pay that additional 7.5%. And you don't avoid it in any of the structures. It's just how it's paid may vary. But just understand that that's something else that you do need to plan for. Okay, in the course of that, there's been created something called an employer identification number, or a federal employer identification number, which is often abbreviated EIN or FEIN. That's essentially it's a number you create through the Internal Revenue Service, and it's essentially the Social Security number for your business. So there was a time when a sole proprietor could opt to just use their own personal Social Security number for their business. Today, again, since some of the banking changes in the early 2000s, banks are often, and this actually has to do with the Homeland Security Act, but banks require a business to provide an EIN. as their identifier before they'll set up a bank account for the business. So that's a piece that even if you don't plan to have employees, you'll need to set up. So you go to irs.gov. They move the number occasionally where you set it up. So if you don't find it at this link, just search setting up an EIN and it will take you to that. It's issued automatically after you fill out a form. The first question on the form is what structure is your business? So that's a decision you'll have to have made before you get started. Of course, you'll also have had to decide the name of your business and how you're setting that up. So, but once you go through that process, it's a very quick process online. They'll issue a PDF file to you immediately that will have that number in it, a letter that has that number. You want to save that, keep that at hand all the time and keep it available, because this is something you'll need for your files for various aspects of as you go through you owning your business. It's difficult to go back and get again. So you can't create a new one, and finding out what your old one was if you've forgotten is a tedious process. So make sure you hang on to that. But no, that's how to get your EIN. Another number that you'll need is a state identification number. You'll need a number from the state if you're going to have employees, and you'll use that when you go to pay your employee, put in your employee portion of your taxes that you've withdrawn. Same thing on the federal side. The EIN is also the number you'll use when you submit your payroll taxes for your employees from the federal side. But the other piece that you need the state number for is as a retailer. If you are purchasing items or materials that you're going to turn into items that you're going to then resell to the end user, only the end user is required to pay sales tax. So as a business, if you're buying materials that you're let's say you're making dresses to sell to people, when you buy the material to make the dresses and the thread and the notions and everything you need to make the material, make the dress, you would not have to pay sales tax on that purchase. You make the dress, markup, make the dress however much price to the customer it needs to be to fulfill all of your needs as a business. Whatever price that is has sales tax attached to it and is then paid to the state. By the same token, if you're buying and reselling items, so you're buying a dress ready made, having it available in your shop to resell, you're obviously buying at a lower price, selling it at a higher price. When you buy it from your vendor, you won't pay sales tax to them. You will, though, pay sales tax on the amount that your customer buys it from you for. So that's how much you're responsible to the state to pay. In most cases, someone selling any kind of retail item, and food is also considered a retail item, food, ready-made food, so restaurants, that kind of thing. When you're reselling items like that, most people just add the tax after. So let's say I have an item that I'm buying for $10, and let's say I'm in an area where my sales tax is 8.25%. I would charge that customer $10.83. And that extra 83 cents I'm going to send to the state for sales tax. And most people understand that, and that's something that's common accepted practice. So your price is expressed in what you're charging, and then sales tax is added on top. In some environments, businesses find it's easier to have a fixed price. A lot of times if you're selling at an event, a fair, a festival or something like that, and you have a booth set up, people don't want to handle money. And so it's easier change. So it's easier for them to give you a $5 bill and it's $5 instead of having it be $5.42 or whatever the difference would be, the amount would be. So if you're doing it that way, then you just have to understand that $5 is inclusive of tax. So you'll back that out. So really you're charging that customer $4 and some odd cents. And the difference is the tax that you're going to remit to the state. It's just a couple of things about sales tax. So if you're in any type of business that you are buying merchandise that you're going to enhance and resell, Your vendor, your supplier will likely ask for your vendor ID number, your sales tax number, and that this is how to go about getting that number. So if you go to this site, you'll register to set up an account. You'll then register your business through the state of Illinois. Again, we're talking about the state of Illinois here. Every state may do it a little bit differently. Certainly there's a different site for every state. So you would go in, you're going to fill out similar information that you did when you set up your EIN, but you're also going to figure out, you'll also have a page where you look at what detail and what you will actually, when you set it up, they'll have general information, much as was part of your EIN application. But there also will be a page that has a vast variety of types of businesses and types of services you might be providing that may require some kind of tax. So you'll want to read through that and see what applies to you. It will ask you if you're going to have employees, and if you say yes, it will start expecting returns from you that are going to have withholding tax as part of that return. So if you aren't going to have employees today, but may 6 months from now, don't check that box until you're ready to start filing those returns. You may have just be on general merchandise sales, and again, that also includes food. So that may be why you're filling this out and why you're going to be collecting sales tax. If you sell liquor, there's some additional forms and taxes that need to be filled out. So it'll ask you that separately. I'll also ask you everything from are you selling tires or are you selling cannabis? So it's a all comprehensive form, but just make sure you're checking everything that applies and not checking anything that doesn't. Once you've completed that form and submitted it, they will actually not give you your number immediately. It will go through a review process and then either come back to you as an email or a mailed document to confirm that you are who you say you are. And then it will give you the number that you're looking for that you'll use with your vendors, and also that you will use when you are remitting the sales tax you've collected. They will tell you what frequency they need you to remit that. If you sell online, there's a different process that you need to be aware of, and I would talk with your SBDC director or potentially your accountant and your online store provider to make sure you're handling sales tax appropriately if you have online sales. Okay, again, just something to remember, the city of Danville levies additional sales tax on some items. So part of the total sales tax number that's in Danville right now, it's 8.25%, is city tax. But if you sell food or liquor, there's an additional food and beverage tax that you need to pay directly to the city. And this is the link to that form that needs to be, and those need to be submitted monthly. Okay, and just remember that all the taxes that you're collecting, sales tax, employee tax, employee withholding tax, those are all taxes that you have collected for the government. You usually are not including those numbers in your sales projections and in your expense projections because they're sort of over and above that. But no, collecting those and remitting those that is a law. And if you are not doing it, understand you're potentially in violation of that. And if you're caught, there are fines. You will not only owe the back taxes for everything you didn't collect or didn't submit. You may have collected and not submitted. You're also you're also in a position where you could be fined for not having done it appropriately, and maybe even charged with a crime, especially with payroll taxes. The government is not particularly. In that case, you're taking money away from your employee. And if you did not remit it to the government as you should have, then you have misused the funds that that employee entrusted to you because that was part of their salary. So those are all things to remember on the tax side. We've talked about location, insurance policies. We talked about insurance. Just know that in some cases there may be special insurances that you need. For example, if you're serving liquor, you'll want a dram shop insurance, which is special coverage for liquor businesses that gives you additional coverage for selling liquor. and additional responsibilities. And understand from the very first employee, part-time doesn't matter, you do have to have workman's compensation insurance for that employee. So if they're hurt on the job, that you have insurance that will cover that, and know that that policy is a requirement of the law to have that. Okay. Let's see, and I believe the rest of this are things that we have covered already. There's also a link here to some good information at the state level that might be helpful. It's illinois.gov/business. It's going to give you lots of resources as well. And of course, your local SBDC is always happy to help as you are walking through all of these processes. So I look forward to working with you if you're in our area. I know our local SBDC would be happy to have you come and talk with them. And we wish you the best of luck in your plans, and know that we're here to help, and we look forward to participating and being a customer of your business someday. So best of luck, and we'll talk with you soon.